Welcome to Larking Gowen Insights, accountancy and business advice for all, the series that gives you bite-sized tips and guidance on tax, funding, legislation, reforms and much more. With case studies, business advisory and sector specials and even interviews, our team of experts are committed to helping you navigate the world of accounting and finance with a variety of presenters from across our specialisms. So, let's get on with today's show.
Hello, my name is Tessa Brown and I'm a manager with our tax advisory team specialising in employment taxes. As we all know, traditionally Christmas is a time for fun and merriment, a big part of which is gift giving and socialising. This often extends into the workplace, and whilst many employers are getting into the spirit of Christmas giving, the same cannot necessarily be said of HMRC, who will have their own set of rules they need to apply. I thought it may be helpful to therefore talk to you today about some of the tax exemptions that would be applicable to gifts and parties, and what you can do when something isn't exempt. So as we go through, I'll be focusing on the employment tax issues, but if there are any special rules for corporation tax or VAT, I'll try and point these out too. So let's start with gift giving. And what I'm really going to be talking about here is where an employer gives gifts to their staff. So when it comes to gifts, there is a very helpful exemption called the Trivial Benefits Exemption. Prior to the 6th of April 2016, there was no statutory definition of trivial. But from 6th of April 16, a new definition was introduced along with specific criteria that needed to be met. So from this date, a gift is a trivial benefit and therefore exempt from income tax and national insurance if it meets all of the following criteria. The criteria that needs to be met is that the cost of the benefit does not exceed £50, the benefit is not cash or a cash voucher, the employee is not entitled to the benefit as part of a contractual obligation, and the benefit is not provided in recognition of particular services performed. So let's look at each of these in turn. The first point is that the cost of providing the benefit cannot exceed £50. This £50 is a gross cost to the employer. So even if VAT registered and the net cost is below £50, you need to consider the gross VAT inclusive amount. When considering the limit, you also have to think about all of the elements of the gift that may have cost you money, such as the card that accompanies it or the postage, as these will all be linked to the cost of the gift itself. The £50 is also a cliff edge and not an allowance. So if you provide something that costs £60, the full £60 would be taxable, not just the £10. If it is not practical for you to work out the cost per employee, you are able to take an average cost per person of providing the benefit. An example of where this could be helpful is where you allow your staff to say choose 3 bottles of wine. You may have purchased a red, a white and something sparkling, with each bottle costing you something different, and depending on what mixture of bottles your employees take, their value could be either side of the £50 limit. In this case, you'd be allowed to take the total value of the wine and divide it among the number of recipients. If the value is under £50, it would meet the criteria for exemption as long as the remaining criteria are met. So the next criteria is that the benefit is not cash or a cash voucher. Cash is often easy to identify as it can be an outright cash bonus, or where it's more complicated, it can be something like the reimbursement of a gift that someone may have purchased themselves. A cash voucher is a voucher where it can be exchanged for its whole, or nearly its whole, face value in cash. A voucher that can only be exchanged for goods, such as a love to shop voucher, is not a cash voucher. So then we'll look at the final 2 criteria together, and these are that the employee is not entitled to the benefit as part of a contractual obligation, and this would include being given something under a salary sacrifice arrangement, and that the benefit is not provided in recognition of particular services performed. What this means is that the exemption can really only apply to employee wellbeing type gifts. I'm thinking gifts like Christmas presents, as we're discussing, or get well soon, flowers, wedding gifts, as these events are not linked to the services performed by the employee. This would be contrasted with gifts that perhaps your top salesman get when they hit their sales targets each month. Those gifts are clearly linked to the services performed in the employment and so would not meet the criteria for exemption. It's also helpful to note that the £50 limit is a per gift limit, and there may be circumstances in a tax year where someone gets multiple gifts, perhaps a Christmas gift or maybe when they fall ill, or maybe they've got married during the year. The only exception to this is for directors and members of directors' households who have an annual limit of £300. Okay, so knowing that only £50 is exempt for a Christmas gift, let's discuss the consequences if the gift is valued at more than £50. Well, to start with, you need to consider if the gift is a voucher, as this dictates the national insurance treatment. The reason you need to ask this question is because vouchers should be subject to Class 1 NIC, which is an employee and employee deduction, through the payroll at the time the voucher is gifted. So as an example, let's say an employee is given £100 worth of Love to Shop vouchers. This doesn't meet the trivial benefits exemption due to exceeding the £50 financial limit, and therefore should be subject to income tax and NIC. If you want the employee to bear the tax, this would go on a P11D for income tax purposes, but as mentioned a second ago, if you want the employee to bear the tax, this would go on a P11D for income tax purposes, but as mentioned a moment ago, as it is a voucher, the NIC would need to be collected through the payroll in the month the voucher was provided. If the gift is not a voucher, the main difference would be the NIC treatment. Other gifts, such as a bottle of expensive wine, would only be subject to employer's Class 1A NIC on completion of a P11D. There is the option, however, for employers to choose to pay all the taxes and NIC due on small gifts, and the mechanism for doing so is known as a PAYE settlement agreement, or PSA. Under a PSA, an employer agrees to pay the tax bill on their employee's behalf, and so the gifts don't have to be reported on a P11D. However, because the employer is paying the employee's tax, which itself is a benefit, a PSA calculation is on a grossed up basis, so they can get quite expensive, particularly when you have higher or additional ratepayers receiving benefits. Setting up a PSA involves writing to HMRC and getting a contract in place before the normal P11D filing deadline. So if this is something you would like to explore, please get in touch and we'd be happy to discuss this further. Generally speaking, gifts to employees would be deductible for corporation tax purposes, and input VAT on Christmas gifts can also be recovered except where the gift is alcohol. There are special rules for business gifts, so if you plan on making gifts for other events such as long service awards or gifts to customers or suppliers, I would suggest you get in touch with your usual contact who will be able to help. So, having explored gifts that employers may give their staff, I just want to briefly talk about gifts employees may receive from third parties. Small gifts of goods made to employees are exempt from tax if the following conditions are met. The gift is not provided by the employer. Neither the employer nor a person connected with the employer directly or indirectly procured the gift. The gift is not made in recognition of particular services. The gift is not in cash or cash vouchers. And the total cost to the donor of all eligible gifts to the employee in the tax year does not exceed £250. So where the cost of a gift or gifts an employee receives from the same third party in a tax year exceeds £250, tax will be payable on the full amount of the gifts. Broadly speaking though, if an employee were to say receive a £50 bottle of wine and a £25 box of chocolate at Christmas from two different customers, and these gifts were in no way procured by the employer, the gifts would fall outside the scope of employment tax. If, however, the value of the gifts exceeded the £250, there would be income tax and NIC as mentioned, and the mechanism for reporting this to HMRC would depend on the precise circumstances. So let's move on from gifts and think about parties, specifically the Christmas party. Whilst the trivial benefit exemption that we've already discussed may also apply to some Christmas functions, there is a separate, more generous exemption for annual functions that you may find useful. The exemption is up to £150 per head per tax year, and I'll come on to how you work out the £150 in a minute, and this applies to any number of annual events where they're made available to all employees generally. So if you therefore have a summer barbecue each year and a Christmas party, as long as you have each one annually, they can both be covered as long as they are within the £150 financial limit. The events do have to be annual events, which is something that happens once a year and on a recurring basis. So whilst an annual Christmas party would be covered, something one-off like an anniversary event would not be an annual event. So in terms of working out whether you've exceeded the £150 limit, you need to take into account VAT, and you also need to take into account all costs of transportation and accommodation, as if these are also provided to the attendees. You then divide the total cost of each function by the number of people attending, which will include non-employees, to arrive at a cost per head. If you have one event and this is under £150 per head, this would be exempt. If the cost is in excess of £150 per head, it would be taxable, and it would be the whole cost that were taxable, not just the excess over £150. If the event were taxable, each staff member would be charged a tax on their own proportion, plus any cost in respect of their family members or household who attended as their guests. If you were to have two events that were both within the exemption on their own, but cumulatively they exceeded the £150, you would be able to choose which event you applied the exemption to. Should employers wish to cover the cost of the tax, like with gifts, annual events are something that you'd likely to get HMRC agreement to get covered within a PAYE settlement agreement. Since the start of the pandemic, HMRC have confirmed that virtual events are also covered as long as they meet all of the conditions. So this means that if you're perhaps having a virtual Christmas party over Zoom and you've hired someone to carry out a quiz and you've sent your staff a hamper of food to enjoy, the event would be covered as long as only those attending the Zoom event got the hamper and the cost was within the £150 per head exemption. Generally speaking, the cost of annual events are fully deductible for corporation tax, even if guests are allowed to attend. For VAT purposes, the rules are slightly more complicated, as input VAT can only be recovered on the proportion of costs relating to staff and not guests. A caveat to this, though, is that if guests are charged for their attendance, if they are, output VAT must be charged on the cost of their ticket, but then you'd be allowed to reclaim the full input VAT. This has just been a brief summary of two of the most commonly used exemptions available to you for Christmas giving and socialising. So if you have any queries in respect of your specific circumstances in relation to income tax, NIC, VAT or corporation tax, please do not hesitate to get in touch. All that's left for me to say is Merry Christmas and a Happy New Year.
Thank you for joining us for Larking Gowen Insights, Accountancy and Business Advice for All. Don't forget, you can find more information about today's topic and more about how our team of experts can help you in your business by visiting our website, larking-gowen.co.uk. Join us again next time for another fascinating insight into the world of accounting and finance.